So yesterday morning we were above 240 for a little bit at least. 10:30 we started to come off. It really was kind of a blah day. I had a couple questions intraday. People were asking, is this a failure? Not really. We basically had a couple weeks of tight consolidation to move higher. And then the market's being a little bit lazy up here, but this isn't, people start to think of, what does it look like when you have a false breakout or something like that? And usually something like that is just an explosive move to the upside, reversal, and then people start piling out. But if we go back on the daily, you just kind of take a look at the last time we broke out. So we had this consolidation, tried to roll over a little bit, then we consolidated for a while. We gapped up and we didn't go. The second time we gapped up to the high area, 239.5 or so, 239.30. When we took that out, we finally went. So it's kind of, anytime the market has a strong bid like this and doesn't roll over and just spends time being accumulated at the highs, the burden is on the sellers to kind of change your mindset. You need to be thinking about, what does it look like? Yesterday we got above 240, couldn't get above 240.20, and then kind of started to fade. What do you need to see that? How does it look different? That all of a sudden you start to think about, okay, we're really breaking out above 240, 242.5, 243, etc. Now IWM is a bit of a different story. We were fortunate enough to catch this first downtrend day, and then we were ready for this kind of day here a couple of days later. The reason we were paying attention to it was so what got us paying attention to it was on this day we got above 141. They were just selling at this 141.70 in the morning, in the middle of the day, at the end of the day. The next morning we touched it and that came off hard. That's kind of what a fake breakout looks like. See the wick here on the 30-minute? And so that got me to start to pay attention to say, okay, there's a lot of selling here. Next day, pop, people are waiting for it. Let's see what happens the next day if we can take out this afternoon support, 140.80. Probably go back to this morning meeting now that we do that archive thing for the last 10 days. Might be past now. But basically, we talked about if it got below 140.80, we'd look for a short. And then confirmation would be the hold below 140.50. So you got both of those things, and you got a really nice downtrend day. And then a few days later, when I was off the desk, we looked like maybe we finished the down move coming to 37 before waiting for it. And the next day, we got back up to 39, but we're still showing relative weakness here. If you look at it, here's your top, lower high, and now it's holding. I think yesterday we were talking about this 138.80 to 139. And if we go into, let's zoom in and see what happened yesterday. In the morning meeting, we said, okay, as long as we're below this little band here, but we can't get above this band, your sellers are still in control, and you can look for potentially taking out this low from the other day. So it's a little bit lower before that at 137. And so what was the high yesterday? So in the morning, it was 83 cents, and then when it spiked up again here, it got to 78. So it's failing right where it should if you're looking for, this divergence of the rollover in small caps versus large caps. This is actually almost a flag right here. It's getting really crowded, this chart. I'll clean it up for tomorrow. But if it breaks today, let's say below 137.80, you need to look for a move into the recent lows, and maybe we walk into something. So that's a mindset there. So it's definitely not moving lockstep with the S&P, the SPYs, and it hasn't really been since the election. So the dynamics of Trump and different policies and things like that. So those are the big picture market things. And the video, which I think we probably now is considered if not the number one, top 2 or 3 momentum stocks in the market, had a good number. And so let's take a look. Let's zoom out and kind of see when it had the massive run, the first gap up on earnings, and then it gapped up again on earnings, and it went from $40 stock to $120 stock. And after that, we kind of set up a trading range for the last, actually not that long ago, 4 or 5 months ago. So I wouldn't think the earnings today would be able to get it outside of this consolidation range. It's gapping higher. Actually 115.5 bid right now. So, after it put in the high, it came back down to 100, had a really nice bounce. It double topped here, tried to roll over a couple times again. It did make a lower high, so you have this 110 became important. Go to the 30-minute. And so from a bigger picture perspective, a stock like this ran up from 30 to 120, quadrupled. Put in your top, and then tried to roll over a couple of times, did not. People were still looking, buyers, momentum, people are still looking for solid numbers for potentially to continue higher. I look at those numbers and I see some raised price targets, but I didn't really see anything that blew me away to think, this could break out from here and go to much higher prices. So my mindset is it's still in this consolidation range. The closer it gets to the top of the range, the more likely it is to kind of fade. And people use this pop, people were accumulating in the last few weeks in the mid-90s to the 100 to 105 area as a chance to sell again. Very quickly, you could see it come back down to this 113, 112. And if they got a little rambunctious, maybe even all the way to 109. And that really is just a function of when it starts to sell off, if more people are like, oh, I better sell because it's not holding this gap so well. So let's see what we got so far. So kind of 117.5 to 118. I think people who are trading this in the after hours were looking at the same longer term stuff as I was. It's 117.5, 118. Kind of looked like a spot where it could fail. And you can see it got the 117.5 consolidated, broke to the upside. I wasn't really watching in the after hours, but after getting above 118, faded all the way back down to 113. So this morning, I would say people are going to sell it a little bit lower, 116.5. A little bit lower than yesterday's high, so a little bit of a lower high. That would be the first thing that I would look for. And if that happens, if it's sold a little bit lower, I would look to see what happens. Could it get below 116 and start to hold? And quick, if it could make quick $1.50 to $3 on that fade, that would be a solid trade. And then, like anything with these big gaps, momentum names, we want to see what does it do in the first 30 to 60 minutes, and that will give us an idea whether or not it's going to continue lower for the rest of the day, or if it might actually test the resistance area. But right on the open, what you're doing is you're trying to make high probability plays where you're risking 50 cents or less to make $1 to $2 generally. That's the mindset until we really see what the big institutions are going to do, and then that should you should get a good idea by 10 to 10:30.
The only thing I would say with that is same thing with
A&M. So they put themselves up for sale. I have no idea if somebody's going to be interested. Obviously, retail sector is just getting battered. People blame it on Amazon, which is a large part of it. Retail's always been tough, though. Changing consumer tastes, a lot of competition. So it went down in the financial crisis to 11.5. Oh man, it's just awful. And a few times it's tried to break out of this longer term downtrend.
Kind of take the trade there.
The most recent time it got into the 30s.
Gets it funded. And then you're like, if it does happen, then you're like position.
Even here, the 16 it doubled.
Take some off.
Held the 16 again. I guess pretty much since it started to consolidate below 16, then complete short. So if I'm looking at this 14, where it broke down here back in December, it's 14 bid right now. So that's the first spot. Let's see if people are going to fade it from there. I don't know how serious people are about thinking somebody would buy them. The more serious they are, the more likely it would be to work its way back up to 16 bucks. Let's go to 6 months. So, yeah, I mean, so it's a couple of times it failed above 16 here, and then back in December, when it got below 14, $10, $11. Yeah, and I could see some people fading in here. I don't think that it has a good shot at catching any bids. But obviously, once it gets about 14, 14.30, then when things get inside of higher consolidation areas, they tend to move to the other side of the consolidation. So about 14.30, it brings 15.5 to 16 into play. I'm not sure what I put on the sheet. I did put in 15.5 to 16, so at least my analysis was consistent there. The next one is EA. So when the numbers first came out, the numbers were so far off from the estimates, there was a lot of confusion. But now I'm seeing that the 85-cent number is what they're using, which is around a 15% beat, which is huge. So anytime there's a large beat like that and it's gapping higher and it's making a high, I kind of like to see how far has it come from recently. That gives me a better idea of whether or not I think there's a probability of it holding the gap. And in this case, although the last couple of years it's moved up a lot, if we zoom in for the last 6 months, we can see that it just spent a lot of time being accumulated in the high 80s. So I think that it should hold this gap. You know, it doesn't mean that there can't be a little bit of profit taking right on the open, which we've been seeing that set up the last week or so quite a bit. The other day, we saw it a few days ago, worked really well. I forget what stock it was, but initially came out, went to 102. It did drop the 100 level. I'd be surprised if it dropped 100. Aggressive would be looking to see it only drop into this 102 right on the open or a little bit below that. Ideally, though, you get a little bit more profit taking closer to the 100. I'd be pretty comfortable buying it here for a retest of the pre-market high. And then if it has a shallow pullback and just goes straight up on the open, we'll kind of look to see where that topping bar is right in the first 20 minutes or so. Watch the pullback and see if there's another entry there. But always the thing that's tricky with a large gap up like this, if you can't get a little bit of a pull in to see some people bidding for it on the open and you're chasing, you really have to be tight. Very few people will make that trade. Guys you see in real time like sharks, they might start just momentum in, and if it just starts ticking down, they'll hit out right away. It's for experienced tape reader, that sort of thing. So that's number 3. COTY, COTY. Looks like they might be on a conference call now. So they beat on revs and EPS, margins higher. So this one was a little bit interesting. So their legacy business, the margins are actually coming off, but they made some sort of acquisition into a higher margin business, so it made the margins look good. So I could go either way on how the market looks at that. The market could say, oh, their legacy business is deteriorating. This isn't so great. The other way to look at it is they acquired a business that is helping to improve their margins. And if we go to the daily, they needed something to improve their business because the stock, after running up to the low 30s, and coming off a couple of times to 22, finally gapped down below 20 and has been kind of twiddling its thumbs for a little bit here.
Better.
I'm just going to see what it's been doing over the last month. So even in the last month, I guess, this is where a lot of sellers here, 19.5. What did I put on the sheet? Yep, 19.5 to 20. So that was based on these two spikes here. But really, it looked like 19.5 is a very important area. It looks like it might have touched it in the pre-market already. And bottom of that range, I guess you pull 18.5. It's traded a few 100,000 shares. So first thing I would be looking for is, does it fail here at 19.5? And play it on the short side, the 19, see what happens. Starts to hold below 19, you have to think about more downside. Wix, WIX. I can't remember the last time I traded this. If we look at the daily, it's kind of interesting looking chart. So it's in this uptrend, and the uptrend started to do, I don't even know what they call this pattern, but it's kind of a widening channel. Maybe they just call it a widening channel. I have no formal technical training. I just, when I'm talking about price action, what you guys consider technical is based on observation for the last 20 years. I did read a book one time, though, a while ago when we started SMB, just to think about topics for training. So it's gapping. So it's gapping right here. And what was the news? The beat and round raise again. So there was a slight raise in guidance. So I wasn't sure if it really was enough to get it. You know, it had this pretty hard down move recently off the highs. And so I looked at it and I was a little bit skeptical of the ability for it to get above this. What I put on the sheet there? I put 80, 81, but even this area right here is probably being conservative because I don't trade it much, but it trades, actually only trades 1.5 million shares. So it's a little bit, it's from, you know, people with more than 1 year experience at least be trading it. And it did, I guess, almost get to 80 in the pre-market, so I probably took 80 there. But this is one of those where it may have already topped out and may not get back up to 80. Just by looking at the numbers, they were good, but they weren't that great. It's up 5% right now, even at 78. So I'm skeptical. So I would say red on the open. If it pops up and you see it make another lower high, let's say 78.70 or lower, and then you see it below 78, I would actually look to fade that. You might capture a couple of dollars there. So again, we're looking at possible patterns, things that I think are more likely than not. But nothing of a slam. You know, VRX was a little bit more of a slam dunk type trade yesterday. So that setup, but these are still some pretty good setups. And here we go, VRX, first, second day technical play. So VRX, I thought we pretty much nailed it in terms of, we talked about, you know, it had been beaten down. They finally paid down some debt. They raised guidance. It's so beaten down that there's not a lot of risk for some funds to step in. And so we had, you know, 1150, 1160 resistance from the pre-market. We talked about worst case scenario being a pullback into this after hours pullback. We had 1050 right below it, which is a good level on the daily. So we got that pullback right on the open. After the initial wick here, it kind of started to hold 80 cents. And then once it got back above 11, it went to the pre-market high, failed the first time, tightly consolidated, and when it took it out, it had a second leg. And so we talked about that in the after hours yesterday. So this is about as clean as you can get in terms of coming into an area where we're looking to buy, held that area, started to reverse, took out the downtrend from the pre-market. After going to the price target area, consolidated for another hour, and then took out the high, and then went up another 70, 80 cents. That's, you know, from an intraday trading perspective, that's as good as you're going to get, pretty much. Looking at it today, some different funds will decide, do they want to add to their positions, do they want to get in, etc. I don't think people are really going to be dumping it at this point, so I'd be surprised to see that much selling pressure. You know, maybe right on the open, kind of like we did yesterday. And so, you know, 1170, what did I put on the sheet? Okay, I did put 1150 and 1170. 1170 is because, you know, that's where it topped out after this first move off the lows in the morning, then held here before the second leg. So that's your spot. I mean, if you can get it here, I would think that's a good spot to get in. You would expect some sort of move into the 12s at some point today. If you don't get that and it's holding above 12 and you want to give it a shot, see if it takes out yesterday's high or tests yesterday's high, that's fine as well. It's a very liquid name. HTZ, it's always a nasty stock. It was nasty again yesterday. There were no support levels. I just bought it on principle. I thought there'd be some bids at 12. That's why I bought it there right on the open. It got above 1180, which was technically my stop. I did hit out of something down here. When it got back above 12, I thought maybe, you know, maybe that would reverse, but then it rolled over again. Let's zoom in. Then they started coming out. Some positive press came out on it. and it had this pop right here, which I faded. So I got flat and I faded against this pre-market support resistance. It rolled over, didn't quite touch 12, and it had a pretty big up move. I think by this point I was probably off the desk. It took out 1275, went all the way up almost to 13.5. And then you can see was really, there definitely looked to me to be a distribution program the rest of the day on this. Distribution program is the opposite of an accumulation program. It's just somebody had a few million shares to sell. They flipped on the switch, and it just the seller stepped down a little bit. They stepped down 3 times. So I'm okay with looking. Again, I wouldn't risk too much on this because it's a little bit nasty, but looking for a failure at 13 would be fine in this area right here. If it started to hold above 13 again, then I would be careful on the short. And then W. I was surprised. I didn't think there was enough there really to get it to do what it did yesterday. I thought if it got above 60 like it did there, it would come back down to 60. It wouldn't do much. But if you look at it, even though it faded a little bit at the end of the day, it did in the morning hold this area around 60 and then held above the morning highs and got all the way to 64. So it's a very strong move. It could make a lower high today at 62.5. If it did that, remember that it's kind of sets up a consolidation area for a few days maybe. It is a pretty crazy stack. So the reason I put 59.5, 60 as support in there is you can look definitely to buy and trade kind of this range here. But if it does get below 59.5 because of its history, you could also look for a big fade. First spot would be to 57. But overall, based on what it did yesterday, pretty impressive hold of the momentum and hold of the gap. So that would not be on my list of likely things that I just described there. Just so you're aware, that is one of the possibilities, albeit probably less than 30% chance. So that's it. We had a lot to cover today. If you weren't in at the beginning, the meeting should be posted in the next 5 to 10 minutes inside of real time. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.